Good afternoon, everyone, and welcome to the latest webinar being conducted by Lexplosion Solutions Private Limited. I'm Indranil, a lawyer and a co-founder for Lexplosion. I'm joined today by my colleagues Javed Akhtar and Kanishka Bose, both of whom are lawyers with extensive experience of working with the financial services businesses, which are the focus for today's discussion. As most of you know by now, the Reserve Bank of India has come up with a mandate on the 31st of January this year, that is 2024, which requires a host of financial services businesses, including upper and middle layer NBFCs, payment banks, and banks to streamline their internal compliance management system. We'll start with Javed and Kanishka giving us a brief background on the RBI's mandate and how it impacts businesses and how Lexplosion and our compliance management solution Comrisk can help. We will then introduce our three esteemed panelists who have extremely wide experience in the area of financial services and have been users of Comrisk at various points over the past several years. So without any further ado, I'll first hand over to Javed and Kanishka to introduce today's topic before we move on to the most awaited panel discussion. So Kanishka, Javed, over to you.
So hi, good afternoon, everyone. So let me just quickly introduce myself. My name is Kanishka, and Javed, can you hear us?
Yes, we can. I can.
Right. So Javed and I will primarily talk about the RBI notification. So Javed will delve deeper into the RBI notification, discuss its implications, and I will try and talk about how technological solutions can address the requirements and the requirements highlighted by RBI in the notification, and how our compliance management software, which is Comrisk, aligns perfectly with these requirements. So we can jump right in, and to start the conversation, we'll start with the overview and maybe some of the key points which are coming out of this RBI notification. Javed, maybe you can give us an introduction to that.
Yes. Thank you, Kanishka, for the brief introduction. So I'm Javed, and I'm here to delve deeper into the RBI notification to discuss the implication of the same on the compliance management. So this notification was issued by RBI in January 2024, which directed the supervised entities to use technology in enhancing the effectiveness of the compliance mechanism or monitoring systems. Before RBI had issued this direction, it had conducted a thorough assessment of the compliance monitoring mechanism and observed variations and differences in the manner in which these NBFCs or these supervised entities have been regulating their compliances. So, for example, few of the entities were using macro-enabled spreadsheets, for example, the Excel files, and some of them were using compliance management solutions like Comrisk. This made RBI realize the need for these supervised entities to bring in a consistent, comprehensive, workflow-based compliance management solution. And it also suggested various features, various interesting features which these tools should have. Through this notification, RBI directs the supervised entities which have already implemented these kind of softwares or solutions in place to conduct a thorough review of their system and try and implement the changes based on the suggestions made by RBI. That is one. And for the entities which are operating as on date without a compliance management solution or a tool, RBI has mandated them to implement a system in place to monitor their compliances, which will be driven by technology. And the end date for implementing such system in the organization is 30th of June. So, Konishko, this is net to net what the notification speaks about. Over to you for further things.
Sure. So you mentioned this is applicable to all regulated entities, specifically supervised entities. So who does it include?
So basically, this notification issued by RBI has been directed to a subset of the regulated entities. So when we mean regulated entities, it means, like when we say regulated entities, it means all the entities regulated by RBI. But in this notification has been directed towards a subset of the regulated entities, which they are specifically mentioning as a supervised entity, which includes the likes of NBFC in the upper layer, NBFC in the middle layer. It includes HFC, All Indian Financial Institutions, payment banks, for a matter of fact, small finance banks, etc. So it is a subset of the regulated entities. Not all regulated entities are being targeted by this particular notification issued by RBI.
Understood. You also mentioned that RBI specifically mentioned certain bare minimum requirements, certain
Yeah.
features that these compliance management solutions should have. Maybe if you could put some light on that.
Yes, for example, RBI has suggested that these solutions should be having mechanism of like effective communication of and collaboration of all stakeholders. That is to say that by bringing in the business team, compliance team, the IT team, the senior management, all of them together in one platform. So that is one feature which has been suggested by RBI. The other one is regarding identification, assessment, and monitoring and managing compliance requirement. This is the other thing. The another feature is having an effective mechanism in place by which escalations can go in. For example, if there is a non-compliance, then the senior management or the departmental head should be having an idea that in this particular compliance there was a non-compliance and that was escalated internally. Also, it talks about a mechanism to record approval of the competent authority, in this case, which is RBI. So, for example, if I'm required to file a return and there is some delay on my part and I took an approval from RBI so that I can file the return on a later date, in that case, the tool or the software should have a placeholder where I can record and the reasoning and also the approval which I got from RBI to file it in a late manner. And lastly, and most importantly, it speaks about the unified dashboard view of reports of compliance position of the organization. So all these things, all these features have been brilliant. These are brilliant ideas and brilliant features which have been suggested by RBI in this particular notification.
It's actually fascinating because it sounds like
Yeah.
our compliance management tool, which is ComRisk, perfectly fits in with all of these requirements which have been outlined by RBI. Because if you consider
Absolutely.
the very beginning, which is what we start off with, the legal landscaping, this is where we assess businesses, we identify compliance, and then people use it to monitor and manage their compliances.
Yeah.
Of course, the tool has a dynamic workflow which allows effective communication between cross-functional users. As the requirement says, we have 10 different levels of escalations. We have the work in progress feature, which basically is for the reason that you mentioned of recording approvals from competent authorities on deviations and delays, right? And then, of course, the reports that we bring in, I think highly customizable slice and dice report is what you can get. So pretty much fits in, each and every requirement that RBI has prescribed.
Absolutely, Kanishka.
So thank you, Javed, thank you, Kanishka. I think that is extremely helpful in setting the stage for the discussion that we are now going to start. So without further ado, I'd like to introduce the three panelists who have kindly consented to join us and give us their time on a busy working day. So thank you very much. I'd like to introduce the three speakers, starting with Mr. Sailesh Kashanur, who is the Vice President, Finance and Accounts for Vistaar Financial Services Private Limited. Sailesh is a chartered accountant with extensive all-round experience in handling the controlling function, taxation, handling inspection of the RBI, due diligence, FP&A, legal and compliance, and off late investor and stakeholder relations and fundraise as well. We are also joined by Mr. Sameer Vyas. He's the Chief Compliance Officer and Ethics at HDFC Credila Financial Services Limited. Sameer is an experienced corporate legal and compliance professional with over 16 years of experience. He's responsible for compliance, governance, and ethics in his organization. Before assuming his current position, he was working as the Chief Compliance Officer at Bob Cars Limited, which is a wholly owned subsidiary of Bank of Baroda, where Sameer was a user of ComRisk. And we are also joined by, extremely privileged to be joined by Mr. Joydeb Mukherjee, who's the Chief Compliance Officer for Capsave Finance Private Limited. Mr. Mukherjee is a seasoned banker who started his career as a provisionary officer in 1988 in East State Bank of Indore, which is a 100% subsidiary of State Bank of India. He has extensive work experience in different parts of the country and in different demographic locations. He's highly task, target, and goal oriented and enjoys achieving challenging targets set up by the organization and the company's board. Post his career in State Bank of India, he joined as the Chief Compliance Officer in Capsave Finance Private Limited from the 1st of August 2023. So that's a lot of experience that we have out here. As I have already mentioned earlier, all of the three panelists today have, either in their current roles or in previous roles, experienced com risk specifically and compliance management solution in the general sense as required under the RBI mandate. So I think they have all the right inputs to be able to have a discussion around the implications of the RBI mandate. So I'll open this up with Mr. Mukherjee, if you don't mind. I'd like to understand at the highest level, what is your view on this RBI mandate? Is this a positive development for the industry in general?
Good afternoon, gentlemen. First of all, thank you for providing me the opportunity. I hope I'm audible.
Yes.
Yes, you are.
Thank you. So I think this is a very positive development which has brought in focus the use of technology, more particularly IT solutions for our compliance job, which has been more or less has been driven by the compliance team. And as you know, it's a highly knowledge-driven area where the compliance team should have a enterprise-wide knowledge and the idea of how an entire organization, the different departments work. So I think it is a very positive development. The only thing is that the time which they have given that the IT-based solution to be rolled out by 30th June, I think it is quite a challenging task. I fully understand and respect the authority and the supremacy of Reserve Bank of India in giving the direction, but I think it is quite a challenging task. But as you know, the Indian financial market has been expanding with an exponential growth. And so I think the RBI's direction for appointment of a CCO came almost 2 years back. So
Right.
on the back of it, they have now introduced this particular regulatory requirement that you should have a IT-based tool. Fortunately, here in Capsave Finance, when I joined, already this particular tool of ComRisk was already there in use. And of late, we have been making good use of it. And it is quite an interesting tool to use for at least to track the different regulatory requirement which are mapped to the various users. And what is the status that on a fortnightly or monthly or even a weekly level in respect of not only RBI requirement, but how there are various GST returns, there are various returns required to be submitted under Companies Act, under
Right.
SEBI, etc. So very extensive work was done initially by the then team, which was at that time it was a single person team. Mr. Bhatia was there, Puneet Bhatia. So later on, now Mr. Bhatia and myself are now in the compliance. So it is a very welcome move
Right.
for the industry, and I think it is definitely going to help the compliance management and
Right.
monitoring in any bank or NBFC for more efficient, effective, and accurate discharge of the compliance function,
Right.
as well as address the common challenges faced by the regulated entities for compliance management.
Right. No, you brought in a very interesting aspect, specifically, if I want to bring that up myself, Mr. Mukherjee, that this compliance solution requirement that the RBI is mandated, and I'll come to Sameer, you first, and then Sailesh. This is not just for the compliances relating to RBI. As Mr. Mukherjee rightly pointed out, it's all compliances impacting the businesses which have been, the SEs who have been brought into the context of this mandate. So from that perspective, in your experience, Samir, of having worked with different tools, what would be the kind of reception that this mandate would get across the industry, and what kind of challenges do you suspect will be there? Mr. Mukherjee, of course, mentioned rightly that 2 months does seem a little short for people who haven't started the journey yet. So, what would be your views on how people should think about this?
Yeah, thank you, Indranil. So, yeah, it's a welcome move by RBI because you might have seen in the recent past, in I think 6 months or 8 months down in the recent past, there have been heavy penalties imposed by the regulator on various banks and BFCs, and the kind of penalties they have been imposing. It calls for a very strengthened compliance system to be in place. In fact, compliance assurance system to be in place and a testing mechanism to be in place. And with respect to this tool, many of the organizations or the supervised entities were using these tools. However, that was not mandatory in the earlier scenario. But now, with the wake of these guidelines, and I would say complex guidelines being instituted by the regulator, and these are not only RBI regulations or the RBI guidelines, though this is a RBI regulated mandate, but this will contain all the regulations, because everything from the incorporation or since the inception of a company is a compliance, right? It includes your taxation, it includes GSTs, regulated entities have RBI, PMLA, everything, labor laws, everything is a compliance. And it is perfectly inhuman for a person to understand and know and remember all these returns date at a point of time, right? So there needs to be a system in place, and without this circular also, there has to be a system in place wherein a person or a team of persons can remember the dates when these are required to be filed, the returns are required to be filed, what are the requirements of fair practice code, for example. So there are various requirements, and these are all scattered somewhere in the system. So in the RBI directions or all the other regulations. So we wanted to have a system or a software, and this is a good move because everything is consolidated in all these regulations are consolidated in one single software or a tool, right? So I think it's a welcome move. Secondly, you pointed out with respect to because it's a tech solution, and not every organization might be having these, and because this takes a lot of time, because you need to assess what is applicable to you, what it ranges from everything, as I said, and then you need to identify people who will be responsible in our organization. Plus, there has to be an integration with the tech team, with a service provider, right? So it's a time-bound activity, and it's tech solution, right? So there has to be a consolidation between all the stakeholders, maybe the from senior management till the service provider, from tech team to compliance team. So everyone has to be close-knitted and to form this tool. So timeline is short, but at least the supervised entities can provide, at least start working towards it, initiate at least, and showcase by the end of or mid of June that we have at least started it and we are doing something. So, but the endeavor should be to at least this improvisation in the system can be done maybe on later stage. But this is a welcome move, I would say.
No, I think Samir, you also have narrowed the point down to the fact that I think RBI would be sensible enough to give additional time to entities which have at least directionally established that they're in the process of implementing a solution, and not come down with a very heavy hand on organizations merely because they've not fully implemented a solution by the 30th of June. So I think the bigger intent is to make sure that people understand that they need to move into a technology-based solution. So I'll come to you, Sailesh, if that's all right now. And I know that you're on mute, but so I'd request you to unmute yourself. So you are again, in Vistaar, where there is already a compliance management solution which is in the process of being implemented. In your experience, from where you started to where you are now, what are the timelines that you were looking at, and considering that as Mr. Mukherjee and Samir have both rightly pointed out, 2 months is what is left for people who are not on the journey yet? What would you recommend? How would you suggest that they use the time, the next 1.5, 2 months that is left? It's technically not even a full 2 months anymore to be able to meet the timelines that have been set.
So yeah, while whether the regulation is good for the industry, not good for the industry, I think that's something which already Mr. Samir and Mr. Mukherjee have already pointed out. But on what you have specifically asked right now, I think one of the significant aspects of implementing any compliance solution, or for that matter, any IT solution, is first to find the right partner. Finding the right partner, in my view, is very, very important. Because this is not the first time we have implemented a compliance solution. We had implemented a compliance solution probably 4 years ago or 5 years ago. It didn't work well for whatever reason. But then I feel finding the right solution partner who's not just technologically competent, but also competent on the subject matter. These both are very, very important. There are two reasons for this. Normally, a compliance in any company is taken care either by the secretarial team, or there's a compliance team, which primarily company secretaries, etc. are there, primarily, or even chartered accountants or company secretaries. But the scope of RBI compliances is so wide. It goes from, say, your KYC compliances all the way up to IT compliances. You have IT outsourcing guidelines, material outsourcing regulations. You have KYC guidelines. It is impossible for even a company secretary or a chartered accountant to understand all these aspects and advise the teams internally, which means you need to have a competent external vendor who can understand your processes first and advise you and say how to go about implementing this compliance solution.
Right.
So they should also be very transparent in telling you what they are able to offer you as a solution.
Right.
And how see, no technology solution can be 100%, no technology can meet your requirements 100%, and that is something that we should understand. But a technology partner can help you navigate this whole process very, very easily. So in our own experience, if I were to look back at our experience, about a year back we implemented Comrisk. I personally was very happy with the fact that we could implement it in less than a month. And we were already 3,000 plus crores of portfolio at that time, which means we are already a mid layer from long time. And there were already a list of numerous compliances that are already applicable to us. So we are still on the journey. I would say I wouldn't say that we are 100% using or compliant. But then the onboarding process and the journey towards being on a compliance solution was made easier through the implementation. And I'm not saying this because I'm on the panel, but I genuinely believe our onboarding process was good. We had it done in less than a month. In fact, the team pushed us to make sure that we are able to implement it much better. And it's not just the implementation that is important, but the post-implementation support, which is also very, very important. Sometimes we find that once we have implemented it, the post-implementation support is where you face challenges. I do not know how to use something. I want some compliances to be changed. I want anything. There could be a lot of operational issues. So to be able to use a solution effectively, I need a post-implementation support of the partner as well. Otherwise, having a solution and not being able to use it doesn't make any sense.
Right.
So I think these aspects are very important. In my own view, I do not think implementing a solution is as much a challenge. 2.5 months is a very good time frame to be able to implement a solution, especially a compliance solution, because most of these are off-the-shelf solutions. And another big advantage of having a solution provider who can provide you an all-round solution and not just a technology solution is that you're on top of any new compliances as well. Like the updates that we get whenever there's a new compliance that is coming from either RBI or any law for that matter, not just RBI, we get it in our inbox, which means that every legal and compliance team normally has a person who's mandated to every day open your RBI portal, MCA portal, and check whether any new notifications are there and circulate it. That is one of the minimum job requirements to be able to manage a compliance. And if a software solution provider is able to do that for you, a significant portion of your job is taken care of there, because what is required for you is already there in your inbox, along with a summary and a link to the compliance. And then all you have to do is to make sure you read it and then percolate it to your other departments and look at as RBI's mandate clearly says, build your process such that you're able to evaluate, build in roles and responsibilities in your processes, such that you're able to comply with it effectively. I think these are my two words on,
This is
your question. Yeah.
extremely valuable, I think, and I think especially an industry like yours, which is so heavily regulated, where the changes are thick and fast. I don't think there is a single day when you could, like you mentioned, for any professional in your industry, going into the RBI site at least once a day is pretty much part for the course. And it's unlikely that if you visit once a day, you will not find at least one change. Whether it's directly relevant to your particular business is questionable, but there would definitely be a change. I mean, even as we speak, the RBI is already now coming up with a new set of requirements around having ESG compliances for a certain level of regulated entities as a mandatory part of their lives, and there's already a discussion paper which is there. So you're absolutely right, and I think we are learning every day because, as your knowledge. So I think you make a very important point that it's not really just a technology solution like many other solutions. We are the knowledge partners come a technology solution. So therefore, having the right numbers of people trained in this specific area of law, because it is specialized, making sure that there are company secretaries, chartered accountants who are working together is very, very crucial. And I take your point, Sailesh. That's a very valid point. Coming back to you, Mr. Mukherjee, and you mentioned that it started with a one-person team and then others have joined. In an organization which is dynamic, in an industry where the regulatory landscape is very dynamic, how important is it to have an organization which is willing to accept change? Because any solution, particularly a SaaS-based compliance solution, requires some mindset changes. People historically have been working using pen and paper, informing the organization over an email or through some other means that they have completed a task. But now suddenly everything becomes transparent. Anybody who has access to the tool can log in and see whether a task has actually been completed, whether the right documents have been uploaded. How important is that change management in the process of making a compliance solution like Commerce successful?
See, one of the challenge or main challenge of any compliance monitoring, management and monitoring is the data is very decentralized. So it is
Right.
not housed at one place. Every department in any NBFC which have multiple products, as well as the operations team, the credit team, and the accounts team, they actually tend to work in silos.
Right.
So these decentralized data that needs to be harmonized, and there is called a compliance culture which must be set in, which is the most difficult part. Like the AML, KYC AML part is the most significant aspect, which the RBI wants to be 101% compliant, not only 100%. And I give you a simple example. Like whenever we are accepting Aadhaar card, it has to be masked so that the Aadhaar number is not open. So even a this is a compliance requirement. But how to build it into the system? I have given you a very simple example. Like Aadhaar, whenever we are accepting Aadhaar, or now we are having a Aadhaar-based OTP document signing process,
Correct.
how
Yes.
it is to be done. So these are all the small things where we'll be depending upon an external vendor. Now there is a whole set of outsourcing guidelines, and one more draft guidelines is in the pipeline, which is coming, which is going to be effective very soon. And if you recall, for the IT set of IT guidelines, there is a huge set of guidelines. So they have advised that formation of not less than 3 to 4 committees, like IT strategy committee, IT steering committee, IT security committee, and their periodical meetings need to take place. Now, having such a divergent regulatory requirement, and harmonize them to a single objective, that my compliance risk assessment score remains as low as possible, and that is the challenging task, and it requires a mindset change of all the people working. The last but not the least is that the generally the senior management in any middle size NBFC or even a upper layer NBFC, they are quite bogged with the business development. So
Right, right,
because
of course.
business is the primary thing. So on a day-to-day basis, the what are the challenges, the nitty-gritty of the challenges, or the granular details of the challenges or requirements very often do not reach the senior management. So in that context, I think RBI has very rightly stipulated that there has to be a dashboard and which must be accessed by the senior management as frequently as possible, at least once or twice in a week. Ki what are the compliance area and where vis-a-vis to that where we stand. Uh, so though I said that 3 months is a challenging time, but I think RBI is mindful of that thing also, because RBI has said in that particular 31st January circular that the NBFCs can choose their own IT solution based upon their size and requirement. So that is also one of the enabler which RBI has given in that particular circular. So as Mr. Sailesh has just now said, the IT requirement itself has become very huge. So so that is one part. So in the compliance tool or the modified compliance tool, if any at all, I think the IT part needs to be captured very comprehensively,
Right,
taking into account the RBI guidelines.
right,
So the any change management, the empathy of the entire team and the senior management, that this is a new paradigm, that the compliance has to be there, especially what has been happening in the very large NBFCs which have failed during the last 5 years,
right.
and RBI had to put up their own administrator to salvage whatever the asset value. So we are aware of these things, and and one more thing, the RBI is gradually bringing the compliance and the regulatory prescription of both banks and NBFC almost similar. So there is a transition. Earlier, NBFC's circulars used to be issued separately
Correct.
by Department of Non-Banking Supervision or Department of Non-Banking Regulations. But now these are all unified. So you will find this particular IT requirement circular is issued for the banks, scheduled commercial banks, NBFC, All India Financial Institution. Those so they are harmonizing the things.
Yes.
And actually, this started since October 21 when they brought out these scale-based regulations.
Right.
So they gradually, and the IT requirement which has recently been prescribed by RBI, actually it is again completely harmonized with the bank. Now the NBFCs are of various sizes.
Right.
Bringing a very culture like bank, in bank the compliance culture is bit different. In the NBFC, though it is a very well regulated industry, but in the bank the compliance culture, whether in the retail segment, whether in the treasury, these are all very robust. So if one wants to go and open a savings account, the PAN verification is done through the API, and then only you can put that PAN number into the CBS, the core banking solution. Earlier, we used to struggle that anyone will put ABCD 1 2 3 4 as a PAN number, and that will fill all the field and that will be sufficient. But then we used to have a lot of data error. So that has been now done away with. All the banks go through the API mode and then only insert. So the data correction part has been taken care to a large extent by banks. And in the bank, Mr. Choudhury, you should be aware, RBI has 3 years back, 4 years back, had introduced this element-based reporting. So the whatever the data or the returns that we are submitting, like Form A or Form 8, which are very essential returns, that has been the RBI is directly taking it from the portal. And we in State Bank of India, we really had to struggle. I was a part of the IT team. I was at that time in Treasury and was interacting with the IT team to bring about this change. And I think in another 4 or 5 years, similar requirement RBI may ask for the NBFC also. So the mind change is the most important thing, and we have to awake to this new dawn that the compliance requirement is sacrosanct, and we all NBFC people have to gear up ourselves accordingly. Thank you.
No, thank you. That's very enlightening. And you were talking about reports, and one of the key challenges that a lot of the senior level people in the large organizations, especially NBFCs and other financial institutions, faces to go and constantly look for information from within the system. So now, for example, in a tool like Comrist, you can choose a report and a periodicity with which you want to receive it. So you don't need to go back to the tool every time you want to report. You can choose compliances for which you want a customized report on in your email box at a defined periodicity, and you can get it. So that is something that hopefully people will be able to utilize more now that this has become a mandate under the RBI. Samir, if I can ask you, you were involved with the deployment of a compliance management solution from the beginning till the end, and you've been to Mr. Mukherjee's point, been a part of the NBFC industry, but as a subsidiary of a larger banking sector, both in your previous role and in the current one. In that context, how, and with the complexities of the data that you're managing, or if you mentioned that it's from diverse sources, how difficult is the deployment process? And for people who are now going to start their journey, those who don't have a solution already and have only about 2.5, 3 months to really go about A, identification of a vendor, B, deployment, what should be the plan? What would you advise them to do between now and the 30th of June?
Yeah, sure, Indranil. So with respect to development, so this tool has been mandated right now, maybe by 31st of January, and the timeline given is 30th of June. So, but any which ways, the compliance team or the person or the team who is responsible for the compliance must be maintaining a manual activity, because any which ways, if you are a subsidiary or if you are a main NBFC, right, and you have to provide a certificate of compliance or the status of compliance to your management, and more importantly to the board, what is the status of compliance? Because tomorrow no one wants that there is a penalty or any show cause by the regulator and the senior management is not of the known. So there must be something or some activity must be doing, maybe on an Excel based or something, and they must have jotted down what are the regulatory requirements for that particular organization, maybe where they are falling, either a bank, NBFC, middle layer, base layer, what they are and what are the regulations applicable to them. So they must be having something in hand. Now, they are the best people to judge and tell a service provider after zeroing in on a service provider that these are the regulations which are applicable to us. However, the service provider will also help them, and both the teams have to work sacrosantly, which all applicable regulations are applicable to their industry, and then they have to jot down. And the major point, make the different teams familiar with the system, because the compliance team might be of the known that these are the regulations, but the different organizations, the different people in the organizations might not be familiar with these kind of tools. So the basic challenge firstly would be to make different peoples in the organization to carve out what are the regulations applicable to us, what are the tasks you would be doing, and what are the set of people who will be doing it on the tool. Because to my understanding, it is a maker checker concept. Yeah, and compliance is not one person's officer is not responsible, it is everyone's responsibility. So tomorrow, you cannot say that chief compliance officer or the compliance team has not let us know, we don't know anything. That cannot be the case, right? So every team has to perform. Every team has a couple of compliance officers in place who in turn should report to the chief compliance officer, and therefore the organization need to work like that, right? So they need to jot down what are the tasks applicable to them, what are the data sets applicable to them, regulations applicable to them. Then they have to identify a couple of people in their organization who would be in these tasks on various periodicities on an ongoing basis, monthly, quarterly, half-yearly basis, on annual basis, and then they need to submit this task or the activity with an evidence on the compliance tool. So this will take some time. It depends on the size of the organization to organization, people to people, how they take it. But the deadline is 30th of June. And after all these mammoth tasks, you need to work with the service provider to get it integrated with your tech team. So it is a mammoth task, but it has to be done. So if an RBI is coming up with a circular, and not in the matter of compliance monitoring, any of the circulars, tomorrow RBI comes up and they gives a deadline of say 5 months, 6 months, they must have thought something about it, right? So they could have made it effective immediately. You cannot challenge it, right? So there are circulars which say that it is applicable immediately. There are circulars wherein they feel that it will require certain amount of time. They give us 6 months time or 8 months time. So this has to be done. So there is no second thought about it, but it may take some time. The organizations need to understand the fact. They have to work with their senior management, the compliance teams, and with their tech teams and the service provider and all this have to be bind together, and there has to be a solution in place. Because the requirement of this also comes from the fact that generally what has been seen that when any investigation comes up and RBI inspects the books and anything, the regulatory compliances, non-compliances, the RBI comes out with a document saying that these are the non-compliances to the senior management, and the senior management are not knowing this. So if you are having a system in place like this, and what they have mandated, tomorrow every week or at least once in a week, the senior management is of the known saying that yes, these are the non-compliances we are working on, and at least at the point of inspection they can at least say that yes, we know these are the non-compliances or these are the work in progress, and we will be doing by a so and so date. So at least the true picture of the compliances, non-compliances, work in progress compliances is put up on a desktop or on a report sort of thing, and at least they can put up to their board or the audit committee saying that yes, these are the things we are working upon, these are the compliant tasks, and we will be taking such and such. So that is from where RBI is coming from, and I think that deadline is there, so that has to be met by 30th of June, and it's not impossible to do. RBI may have given a timeline of say next year January also, but if they have given a task of 30th of June, they must have put a thought behind it that out of these so many banks or NBFCs, maybe 60% are having a solution in place. However, that is not working properly, or 45%. I'm just throwing out a number here. So maybe 45 or 50% of the population don't have a service provider in place. So they must have judged something and then given a deadline. So that is the thing from my side.
Sailesh, if I can come to you, one, of course, if you have any thoughts on the deployment process, but also on an organization like yours where you already have a solution. The RBI has laid down some requirements for businesses which already have a solution as well, in terms of putting in processes for identifying, assessing, monitoring, and managing compliance requirements. So what is your plan for the next 2.5 months between now and 30th of June to make sure that you are fully in compliance with the requirements of the RBI mandate?
So see, I mean, very good question. That is because once we have the compliance solution, the biggest challenge is to build these as part of the internal processes of any company, which means that the compliance itself is not an activity. Compliance has to go hand in hand with the existing processes of the company, which means, for example, say a KYC policy of RBI. There's a KYC master direction, right? Now the KYC master direction has to get integrated with my operational process within the company. SBR regulation has to get integrated with my internal processes, for example. Again, IT outsourcing policy or a IT master policy on outsourcing, I have to have internal process wherein it is designed such a way that the internal teams as part of their regular work have to integrate their work and one of their activities has to be updating compliances within a compliance solution, right? Now there are things which you can update, there are things which you cannot update. For example, say RBI requires, for example, you require an ombudsman within an BFC, an ombudsman, right? You need to every branch should have a copy of that attached. It's a continuous compliance, right? Which means that now if I were to take a solution, for example, even Commerce, and if I tell I'm in the NBFC business, I'm in the mid layer, you'll give me a list of 1,000 compliances that I have to do. That's how your software is designed. Right? Wherein as soon as I say I'm this sort of a company, you'll give me a list of all the compliance that I'm supposed to do. So one of the first activities is to filter out and say what is applicable for me, what I'm going to update monthly, what I'm going to update quarterly, what I'm going to update half yearly. How do I want to update my compliance and give the dashboard to my senior management or to the board of directors or to the RBI when there is an inspection. Now it is almost impossible to do everything all the time. I mean, in terms of which have to be done on a monthly basis. For example, a reporting, the DNBS 1, 2, 3, 4, whatever reporting that we need to do monthly. These are monthly activities. I will report along with the evidence monthly. Some which have to be perpetual in nature. You will have to decide how you are going to do it and make sure you have an internal process around it, which means you have an internal audit team. When they go to the branch as part of their checklist, they also need to verify whether a set of these RBI guidelines are being followed or not. You need to have a dipstick to make sure there's a code of conduct guidelines, fair practice code of the RBI is being followed as part of the business. How are you going to do that? When RBI says, all the regulations of the regulator have to be followed, it means A to Z. And normally, if you look at any of the RBI inspections, significant amount of time is spent by the RBI audit team on the governance of the company. One is your data points, how are you doing your disclosures in your audit report, verifying the customer contracts and all of that. But they give a lot of weightage to the governance, of how the governance is being handled in the company. And if the intention of RBI is to make sure, see, if you look at the wordings, in the particular circular, they say you have processes for identifying, assessing, monitoring, and managing compliance requirements. That's what they are saying. Which means ultimately it doesn't go through a push mechanism wherein the compliance team will remind all your other functions that this compliance has to be done. You please give me this the evidence of this compliance. But it has to be integrated within the process. Part of their SOPs, individual team SOPs have to have an integration along with RBI compliances, such that there's a mechanism to also update these SOPs periodically, as and when there's a mechanism to review SOPs periodically and check whether these are in compliance with existing RBI regulations or not.
Right.
Very important that this happens. Otherwise, I have an ombudsman policy within the company. There's a new regulation which has come very recently. But I've said, okay, I already have an RBI ombudsman policy. But who's going to review and say that, is this present policy in compliance with this or not? And what am I supposed to do additionally over and above this? See, one of the stated objectives of RBI governors, they want to future-proof the financial system.
Right.
Current financial system. And a deputy governor has said that, what better time to repair the roof? The best time to repair the roof is when the sun is shining bright. Right?
True. Very true.
So they are saying presently the financial system is very, very sound. So whatever governance structures they want to build is now. And therefore, I think they're coming up with one or the other regulation to make sure that there are systems in place to make sure the corporate governance for all these regulated entities is at a level which is highly satisfactory to RBI.
Right.
Yeah.
No, I think extremely valuable points all across. And I think one of the core things that you mentioned, Sailesh, and what Sameer and Mr. Mukherjee have also mentioned previously is compliance, especially in a regulated financial services business like yours, is all about having the right business processes. It's not a checklist. It's not something which you can just go and say, I've done this and just keep ticking. These are not activities which can be done at defined periodicities, but these are processes which need to work continuously. And especially in the context of the way RBI is constantly coming up with more enhanced requirements, clearly the expectations of the industry are constantly going to be to have stronger, more robust processes. So I think we've broadly covered the areas that we wanted to cover, and I'm extremely conscious of time that we are almost close to 5 o'clock. There are a couple of questions that have come in, and I think there are a few others. Mr. Mukherjee wanted to make a point. Sorry, please
Yeah,
go ahead.
one thing I would like to emphasize is that the compliance testing. See,
Yes.
if a compliance testing on a monthly basis happens, so that how the tool can help in this compliance testing. That is, so far, I mean, in bank as well as here also, we have been the compliance testing, whatever we are doing, it is practically a manual thing that we are feeding into an Excel sheet. Okay, so how this compliance testing to a large extent can be mechanized so that it is not just a manual interpretation or manual intervention. That is one of the thing I would like to request you, being head of the this Lexplosion. And another thing is the what I feel is that the requirement under the CCO's role is compliance risk assessment, that at
Right.
least has to be done once in a year. That is what the circular states.
Right.
So how Comrisk can help us in
Sure.
achieving that thing? These are my
Sure.
two last thoughts, which I would like to share with you.
Both are extremely valid thoughts, and what we'll do is we'll set up some time with you separately to have a
Yes.
discussion and work on a plan. On the risk assessment, we already have a risk monitoring system built into the tool, but there are additional pieces of that we can discuss as well. So we will take this up with you and then come back to this audience with our plans with regard to both testing as well as risk assessment.
Sure.
Kanishka, we have only 5 minutes left, so if you want to take us through some of the questions that have come through before
Sure.
we can wrap up for the day.
Sure. I think we have a question which says, will this solution be modified according to our company's applicability? Further, if some new sets of compliances come up, then how assistance will be provided? I think this is more for Comrisk team. So I'll go ahead and respond to this. So yes, the compliance. If you are subscribing to Comrisk, what we do is we go ahead and customize, curated the compliance checklist that is provided, and that is as per the laws that are applicable to you. And we keep an eye on all the new laws, new compliances, new circulars that are coming in. And as and when something which is applicable or relevant to you is there, we go ahead and update your tool automatically. So that's the process that Comrisk automatically builds in. I'll move on to the next question. This is, should NBFCs start implementing the compliance management solution only to cover RBI regulation, or is the June 30th timeline for onboarding a tool with all compliances? So maybe, I'll pose this question to any of our three speakers today.
I think if you look at the first line of the RBI directive, it says system in place for internal monitoring of compliance with regulatory instructions. Okay. While the RBI, obviously the RBI, cannot direct you to comply, or maybe they don't want to direct you to comply with, say, Companies Act or an Income Tax Act. But the intention is very clear, I think. If you're anyways implementing the solution for an RBI directions, you could as well implement it for everything else, because that's not is part of the overall solution. And from a compliance point of view, for the company, that works better than only looking at RBI compliances separately and other compliances separately.
Thank you.
Right.
That's I think the perfect way to answer that. Let me go to the next question. So, do you see a possibility that RBI will open up APIs to the RBI reporting portals in the future? And if there is a possibility of having direct integration between the RBI portals and the compliance management tool, is that possible in the future? Any thoughts?
I think we have seen that very recently. I think from this month onwards, RBI has actually come up with new reporting tools. It's a new reporting tool which has started only now. And the biggest challenge in doing an API integration with a regulator system is whether you can build your systems accordingly such that you can map exactly the APIs to say for example you want to do a return. How feasible is it? While RBI is very clear that you need to have a single source of truth, they have also come up saying that you cannot have multiple. One of their very regular observations in RBI inspections is that your data should have one source of truth. They could very well allow an APIs in the future, but I mean that's for the RBI to decide. But definitely, I think one of the specific requirements of RBI is to have one set of a combined one set of solution for assets as well as liabilities.
And RBI is a very forward-looking regulator generally. So, many regulators across the world are today opening up their portal and helping third parties like us to connect with through APIs with their portal. So it is quite likely that this will happen. When, we don't know, but surely sooner rather than later. We have time for one last question, and there's a question from Harshini Gutka, which it says that sometimes the actions of regulator seem to be arbitrary, and banks, NBFCs have no option but to comply with the same. There has to be conciliation, arbitration mechanisms available for industry players. Views are solicited from all panelists. So I'll start with Mr. Mukherjee and then go across to Samir and Sailesh, and we'll end with that because we're already at 5 o'clock.
So I will rather say that actually RBI is making the prescription very clear-cut prescriptions, and we as a regulated entity, we just have to follow the prescriptions. So that is a see. I have been in policy making also. Policy making is not an easy thing. That many people perceive just policy making, it's not an easy thing. RBI is giving very comprehensive prescriptions. See, like the AML CFT guidelines, how many times they have revised based on the country's requirement or based on the international situation. There is a dynamism, it is a very dynamic nature. So we have to appreciate how a country's economy moves and what are the requirements. And accordingly, RBI is giving full prescriptions like outsourcing guidelines. It is a full-fledged. Suppose if you have asked me to prepare a guidelines for myself, that also won't be very easy. And sometimes we tend to make it more stringent. So at least RBI giving you a foolproof prescriptions, you have to adhere to it. Yes, there are challenges, but the RBI also, during the course of inspection, I have found that your good intent or your good governance practices and your intent to adhere to the regulations, or albeit with some minor deviations maybe here and there, they are also they provide their coaching also. So it is not that the RBI just prescribes from the ivory tower, hurls at you. So they are quite supportive. I mean, that has been my experience. I have handled RBI inspection in bank to a very large extent, and recently here. And I found them gradually their SSM teams are becoming very sensitive. And if they find that the company is in earnestly trying to comply with the same, they are not arbitrary. I will rather like to say that thing.
Sure. So I think Samir, would you want to go next on this? And
yeah, sure. So see, RBI has given a license, and they are the regulators, right? So they have given a license to an NBFC or a bank or to all the other regulated supervised entities. So they have given the license and to work on those compliances. There are terms and conditions on the license, right? You will need to follow those terms and conditions, and ongoing terms and conditions need to be followed. Now, I would agree with Joydeb Mukherjee here, sir, because they are quite sensitive to the fact that the intent should be there to comply with the guidelines. It's not, the guidelines are somewhere, they are like for example, this circular also, there are circulars which are very difficult to comply with from tech perspective. But if you show the intent, if you show the right intent, the inspection teams are they won't take you to task, right? But if you are not doing anything about it, you are negligent about it, and you don't want to comply with, then the action is bound to happen. So the business is important, but the business needs to be conducted with awareness of compliance, which is the thing which is what RBI or the regulator is saying. So the intent should be there, and if you show the intent, the action won't be arbitrary. There would be reasoning behind it.
Sailesh, any last thoughts on this before we wrap up for this evening?
No, I think it's very well articulated already as to this. So I think I agree with the panelists, and that's it. Yeah, thank you.
So yeah, I think Javed has a point.
Yes, so I have a question for this team. Like, just wanted to know, is there any specific reason why this notification has excluded the NBFCs in the base layer? It only applies to middle layer and upper layer, it doesn't include the base layers.
So I think there are many compliances which are not applicable to base layers. If you see the SBR circular regulations, that also, and this circular also does not mention the top layer also. Top or the top mein to koi nahi hai. Upper layer also.
There is no one.
So but base layers, they are the nascent at the nascent stage of their business, to my understanding. I may be, but I would require thoughts from other fellow panelists. The base layer are also, there are much less compliances as compared to middle layer. You will see number of NBFCs in middle layer. There are many number of NBFCs in the middle layer as on date, as compared to base layer or upper layer, right? So I think these NBFCs may be middle layer NBFCs may be prone to be moved. I was reading somewhere to top layer, or top layer may be prone to be in the top. Move it to top.
Samir, you are on mute.
So I was saying that gradually these NBFCs, when they increase their business, the upper layer maybe tend to be to the top layer. I was reading somewhere that these will be in top layer, and they will be looking for giving banking license to some of these NBFCs. So gradually, when you move the layers, the compliance structure or the compliance requirements increase. So that may be one of the reasons. My thoughts. Other panelists may give their thoughts on that as well.
Sure. And my last question to Sailesh is, like, since you were discussing about this portals, RBI is having two portals right now. One is the XBRL and the other one being the CIMS. So there was one notification in like we observed, like not it was not introduced by RBI in the website, but we somehow managed the notification from web source, stating that for the time being, NBFCs have been directed to file their returns using both XBRL and CIMS. So in this case, like, how are you dealing with? Because to me, if you ask me, it's a duplication of work. I'm submitting once my filing with using the XBRL and then again CIMS.
No, I think that has been modified. Now they have redirected that it has to be in the CIMS only.
Okay.
So we are doing in the CMS.
Though there are certain issues in CIMS we are facing, but they have directed.
Okay.
And there is another portal for compliance related matter, that is the Daksh portal. That also we are using extensively, and that is the portal where the additional compliance requirements are thrown up by RBI. So, that is
I think we are already well past our timeline, so we will stop now. Thank you so much, Mr. Mukherjee, Samir, Sailesh, and of course Kanishka and Javed for all your wonderful inputs and your time. Really appreciate it. Thank you so much to everyone who found the time to join today's session. If you need any further assistance, if you have any questions, do feel free to reach out to us. If you want to reach the panelists, you can let us know and we'll write to them and seek their inputs and additional questions that you may have. Thank you so much. Have a wonderful weekend and hope to see you all sometime soon again. Thank you very much. Till the next webinar.
Thank you. Thanks to all of you, sir. Thank you.
Thanks a lot.
It has been my pleasure. Thank you.